December 2024 isn't just another month for the Reno-Sparks real estate market, it's a turning point. The red-hot market that had buyers battling it out and sellers celebrating is cooling down, and not just a little. We're talking about a market shift that could save buyers thousands and challenge sellers in ways they never expected. Bidding wars disappearing. Sky-high prices, well, they're taking a breather. But here's the million-dollar question. Are you ready for what's coming? Stay tuned. In the next few minutes, I'm going to break down exactly what's happening in the Reno-Sparks real estate market, the numbers, the trends, and the insider insights that could make or break your next move. This is more than just a market update. Are you ready? Let's go.
Assist to sell way smarter.
So the first chart we always like to take a look at is mortgage rates. But before we get to that, a couple of housekeeping items. Number one, this is for the Reno-Sparks metro area only. Is only for single-family residential properties. Does not include apartments, multifamily, commercial land, etc. Now on these charts, the main data point we're going to be discussing is usually right up here in this yellow box. Right of that will be November 2023 and the difference compared to the two. So most of these charts are going to be year over year. Why do we look at mortgage rates first? They have the biggest impact on the real estate market, prices, sales volumes. What I want to make you aware of is this channel that's forming right here between about 7.5, 7 3/4, and around 6 1/4. This channel is starting to form. And the reason I point that out is that's where I believe interest rates are probably going to stay for most of 2025. As I record this, it's early December. We're looking at 6.8%, which is down 8.6% from November of 2023, where we were sitting at 7.4. Now, why are mortgage rates important? Well, they affect mortgage payments. And this is the average mortgage payment for a median income earner putting 20% down for the median priced home. This includes taxes and insurance, and these are all estimates, of course. But as you can see, we're sitting at $4,041, which is down slightly from last year. We were at $4,160. But again, what we're seeing here is much lower house payments, and then, of course, interest rates spiked up. Home Affordability Index, I don't need to go through a huge explanation, but just understand the higher the number, the better. Meaning 100 means that the median income earner locally can afford 100% of the median home price, which we'll get to here in just a moment. Anything below that means they can afford less and less. So right now we're sitting just over 50%. We are up slightly 3.8% from last year, but still historically low in terms of affordability. How does all this affect the median sales price? Right now we're sitting at $540,000, which is up 2.9% from this time last year. We're sitting at $525,000. But once again, I want you to notice the channeling of prices here. I do expect this channel to continue as long as we have lower sales volumes and we have higher interest rates. That should continue. Now let's transition. I want you to notice on this chart, we have the number over here, the number of new listings, and then again, the dates are along the bottom. Now this is new listings. New listings just mean the homes that came on the market and were listed for sale in November 2023. Some of these may still be on the market, some of these may be sold, but this just gives you an idea of the flow of listings we have coming onto the market. And it's good news. We're up 21% from last year. We had 450 homes come on the market in November. We only had 372 last year. Now, each one of these charts, we try to break down by price. Again, number of sales on the left, price range on the bottom. You can see it goes from 100 to 2, 2 to 3, 3 to 4, and so on. As you can see, the majority of sales are taking place between this 4 and about 650, 700 range is where the majority of these new listings are coming in. Now let's look at active. Now, what's the difference between active and new? Active just means they're still on the market. Some of those previous new listings that came on in November and October are still on the market. Some of those sold through, but these are the properties that if you're buying a home, you could go out and look at today. If you're selling, this would be direct competition. 1,247, which again is very good news because that's up 26.7% from November of 2023, where we only had 984. And what I want you to look at this chart is a more normalized market back in 2014, 15, 16. We're seeing inventory rebound, which is a very good thing. Now let's look at active inventory by price range. And as you can see, once again, most of the active inventory is between that 4 to 5 up to about 750, 800,000. What I want you to pay attention to and make note of is the inventory about 650, 700 to all the way up to $1.5 million plus, this area up here. And you'll see why here in just a moment. So now we have new listings active. Let's transition over to close. These are homes that actually sold and closed in November. 403, which is up slightly, 5.8% from November last year, where we had 381. But look at the closed sales by price. Once again, sales price along the bottom. As you can see, the majority take place here, which isn't a surprise. But what I wanted you to be aware of is look at how few sales are taking place from really 700, 750 and above. The sales really start falling off. And you compare that with the active buy price, which we just talked about a few minutes ago. Look at how many actives are there. Look how few are closing. So what happens when you start have inventory building and sales falling, it tends to put pressure on prices. Now, another chart I want to share with you is months of supply. Now, this is just an overall kind of a canary in the coal mine chart where we like to see how many months of inventory we have. So the way this works is, let's say you sell 500 homes every month in your marketplace and you have 1,500 homes on the market. Well, if you didn't list another home and you continue to sell the same amount of homes every month, you'd have a 3-month inventory built up. If you had 1,000, you only have 2 months. If you had 2,000, you have 4 months, and so on. So the reason we like to look at this is it tells us that we have a more balanced market, a buyer's market, seller's market. We'd like to see, for a more stable market, 3 to 4 months, up to about 6 months is a stable market. Anything really below 3 months starts to become more of a seller's market. Anytime you get above 4.5, 5, 6 months and above, it becomes more of a buyer's market because there's a lot more listings on the market. Buyers have the upper hand. They can negotiate a little more because there's a lot more to choose from. So what we really want to see is probably 3, 4, 5 months in this range. We're starting to get there right now. 3.1 months of inventory, which is up nearly 20% from last year. We only had 2.6 months. And if we start looking at month supply inventory by price range, it once again gets very interesting, because if you look at the upper end price ranges here, $1.5 million plus is 6 months inventory, well over 6 months, from $1 million to $1.5 million, and we're hitting close to 4 months inventory on the 750 to $1 million. And even down here in the lower price brackets, we're really over 2.5 months and starting to climb. So this, in terms of prices, is a good thing. It will slow prices down. We're going to see more pressure on prices. And then another, for lack of a better term, canary in the coal mine chart, we like to see how many homes went unsold, meaning these are homes that went on the market, they did not sell for one reason or another. Now, 139 is not a lot, but it is up 12.1% from last year. We only had 124. Want to sum it all up with a couple of things. Number one, if you're thinking of selling, now is the time to evaluate and get more aggressive. Maybe you're going to put your home on the market first of the year. Do your homework, because things have changed. As a buyer, the good news is you start to have more options now. You can look around a little bit and you have more to choose from. Are prices going to come down significantly? They may soften up. I don't think they're going to drop, though, significantly. And of course, if you have any questions, don't hesitate to reach out, which brings me to my next point. If you're thinking of selling your home or even buying a home, you owe it to yourself to check out Assist to Sell. We'll sell your home for only $49.95. That's right, $4,995. If your home is over $500,000, it's only 1%. Significantly less than you might expect to pay from some other realtor in town. And we take care of absolutely everything, guys. We do everything from show your house, advertise it, run the paperwork. We do aggressive marketing on your home to make sure it gets sold. You're not going to find a better value in real estate today. So if you have any questions, don't hesitate to reach out. If you want to know what your home is worth, you can go over to our free tool. Click Find Out Now right here. Type in the address and an automated report will be sent to you. We'll also follow that up with a more detailed CMA. So maybe you're an investor looking to liquidate one of your properties. Maybe you're just a homeowner looking to move on and sell. Or if you're a buyer, maybe you found that dream home, which you're thinking about making an offer on. You can come here, double check the value, make sure you're not overpaying. Thanks again for joining us. Make sure you hit that subscribe and like button. We sure appreciate it. We'll see you next time on the Reno-Sparks Real Estate Market Update Show. Bye-bye.
Assist to sell way smarter.